Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. So happy we get to have this fourth conversation with the one and only Anna Kelly. Hi, Anna.
Hi, Michael.
We're going to try this one again and see if the sound works. It's going to be fun, huh?
Sounds good.
So the first couple of videos we did today was kind of downers. There were a reality, right? Rates are going up, housing depression, less transactions. But if we step back and look at ourselves instead of the greater world, I am personally more excited about 2023 than probably any year except 2010 and maybe 2011. What do you think about 2023?
I agree with you completely, right? As Warren Buffett says, and I like to quote him on this, right? Be greedy when everyone else is fearful and be fearful when everyone else is greedy.
Yeah.
And we have these huge market cycles that only generally happen every decade or so, sometimes a little bit longer, sometimes a tad shorter, where real estate and the economy both kind of come down, and you're in this recessionary territory. And at that time, it's really the time when people are most motivated to sell. They get nervous about the economy. They need to sell. And it's the best time for us to have true opportunity to buy from motivated sellers where the price point can make sense, regardless of what's happening with interest rates. And we can really be valuable to sellers by creating win-win situations that help them out during tough economic times and also give us opportunity for continued upside and cash flow over time.
Yeah, to kind of put an explanation point about that and to let most people know what I'm thinking. I actually think, Anna, we will control and own more real estate at the end of 2023. And you're right, probably 2024 as well, with less cash invested. Because the last couple of years have been very cash intensive, right?
Yes.
I see creative financing, seller financing, win-win conversations. You want out of this? I need it. I need these numbers. You want that price? It's going to be the opportunity for investors like us who have reputations, who have portfolios, who have evidence of strength to work
Yes.
out some amazing deals.
Absolutely. Absolutely. Because there are going to be a lot of people that are in pain and need to get out. I play mostly in the multifamily space, as we've talked about before. And, for various factors that are similar to single family, but especially sensitive to interest rates and loans, people that bought at top dollar with very little spread between, their rate of return and their loan, when loan rates reset higher, they're going to be very motivated to sell. And so I'm looking for large opportunity to buy, apartment buildings as well as single family and vacation rentals, from people that really need to sell the deals.
Yeah, so we'll break down all the stuff that we plan. So let's talk about multifamily first. I actually expect in 2023 or 2024, Olivia and I will buy our biggest building that we've ever bought.
Awesome.
Because I think there are some syndications, whether they be small or much larger, that had there. In my opinion, the last year or so of syndications have repeated the exact pain of single family: short-term debt, variable rate debt, stupid assumptions. It only goes up. I mean, there's all this stuff, and now they're just playing with bigger numbers. So
Yeah.
if we're right in 30-year money, owner OC is 7. What does that mean for multifamily on a 25-year AM when banks are nervous, right? They're going to go from 75% LTV to 65. They're going to have your debt service ratio go from 1.25 to 1.3. I mean, it's going to be all kinds of bad. And they'll be like, well, I guess I got to sell. And I want to be
Yeah,
there.
and that's already happening. So right now, if I find a large multifamily deal, I'm lucky if I'm getting 60% LTV, 60
Wow.
in a major market. That's with perfect credit, decades of track record, and a lot of experience. And so, the larger multifamily lenders are definitely cutting back on the loan to value, which means we as investors have to come up with more cash. So you were talking about on the single family, maybe being able to come in with less cash. On the larger multifamily deals, we're having to raise more cash, either from joint venture private equity groups, or additional investors. And so there's a lot of great opportunity, but we do have to definitely come in with a lot more cash to take those deals down, and underwrite very conservatively. So that's something that
Yeah.
I'm still looking to buy. I'm still going to buy and bring
Mm,
deals to investors. We're also looking at moving a little bit into new construction.
mm.
And part of the reason for that is construction prices are actually going to start coming down as there's less people able to buy and take down these transactions on older properties. And so we're looking at some opportunity, in new development. I'm working on that with small multifamily in my own market, as well as potentially some single family, development. So there's opportunities not only in helping out sellers that have to sell, but if you look at opportunity, there's opportunities all around us, whether it's buying new, building new, or buying something used.
Yeah. I think what we will see in a decade is there was a vintage of syndications that will go down just like the teaser loans, right? The 2 and 28s, right?
Yeah.
2005, 2006, those last 2 years of the housing bubble were mainly fake. I think there's going to end up being a vintage of real of syndications, probably 2021 and 2022, that in retrospect were just top of market bad assumptions that
Yeah.
that got forced to sell because of loan resets, load covenants, all of that.
Yes.
So
And where
that's
there's going to be the most pain and really the most opportunity for us as investors is really the Class C property market, and tertiary market. So a lot of these investors that were chasing yield, they couldn't do a Class A to B deal anymore. So they moved to these smaller deals in smaller markets
Mhm.
and, paid way too much for these properties. And now those properties are not going to be as valuable. So we're already seeing decrease in values for Class C assets.
Yeah. So let's flip to Airbnb. I think there's going to be, again, tremendous opportunity in Airbnb. I think there's going to be a thinning of the herd
Yes.
on Airbnb, right? We've talked about the pain, but I think I saw a post earlier in the week where you bought something sight unseen. So
Yes.
again, when the deals come, the deals come. You just got to know the market, do the work, have courage, have confidence. So let's talk about how does somebody go about doing probably a pretty significant purchase sight unseen. Tell us about it.
Sure. So, I've done two properties during really tough economic times. I mean, I bought a beautiful second home in Ocean City, Maryland during the pandemic that had a very motivated seller, very well off, but had a business. And, the business was shuttered. They were building another bigger second home and had to sell this one in order to be able to close. And so I was able to come in and know my market, right? I knew what the value of that house was worth because I had been looking at that market for a while.
Mhm.
So when the value of the house came down, it was easy for me to say, hey, this is a home worth a lot more. This is a unique opportunity. The
Mhm.
same thing in Perdido Key, Florida, where I just bought a condo sight unseen. I had been researching that market really for about a year. And so I knew what a good deal looked like, and
Mhm.
I knew what a great deal looked like. I knew, the numbers. I knew the property management fees and the taxes and the insurance and the rental rates for condos just like it. So I had been doing that research for months. So when I saw this particular deal, it was updated nicer than others. It had a strong track record of rental history for multiple years, not just 1 year, right?
Mhm.
So I knew what is the average going to look like over a few good and a few bad years. And it was very easy for me to get a realtor to walk the property, do a video chat, and look at data to go, okay. And I made an offer, the first day that it was listed because I knew that it was a great deal, not just a good deal.
Awesome. So I'm curious, did you pay list price?
I did pay list price. In this market, you kind of have to, know what a good deal looks like to you.
Mhm.
And for me, it's not so much about in the past, in 09, 10, 11, we were spoiled with being able to get a steal on the price.
Right.
In this market that we've had, a steal on the price wasn't happening. But if I'm looking at cash on cash and ROI,
Oh, we lost Anna's sound again. Let's see. She back? Yes, she's back.
yes. So I don't care if I'm getting a steal on the price. I'm just
Right.
looking at my cash on cash and my ROI
Mhm.
and seeing what makes sense. And if the deal makes sense, the deal makes sense.
Awesome. And then let's round it out with single families, kind of, duplexes through quads. So residential financing. That's an area that I'm really pushing for. I'm direct marketing to sellers of that
Yeah.
because I'm looking for owners who have plenty of equity. I am purposely looking to do seller finance deals with 10% down if I can, either do a 50, 40, 10, 50% first, 40% second, or maybe just a 90, 10, right? 90% seller carry, which I've done in the past, and 10% down. I'm
Yeah.
looking to do some seller financing, and I'll buy entire portfolios if we can make the numbers work.
Absolutely. I love creative financing, and I've been, doing some talks on this very topic that, some people said creative financing was dead. And
Yeah.
the reality is creative financing can work in every single market. It even worked in this really tough market before because price is not always everything to sellers, right? It's really finding what is the motivation for the seller. What problem are they trying to solve? And then you figure out how to solve that problem. For
Mhm.
some people, it's capital gains, right? They don't want to pay capital gains. And so you can do an installment sale and kick that gain down the road.
Mhm.
For some people, they need out, right? And
Mhm.
so it's all about coming to a seller and especially with off market deals and saying, what does a good deal look like to you? What do you need out of this sale? What are you going to do with the money? What
Mhm.
problem are you trying to solve? And then you show them, listen, I can take this deal down in lots of different ways, but I care about you and what you need. So let's work out a win-win and, let them tell you their problem and then you come up with a solution. And sometimes that's full seller financing, sometimes it's partial seller
Mhm.
financing. So always be willing to get creative and educate yourself on that.
Yeah, and again, this is really to point out the fact that I am very excited for 2023 personally. I think Olivia and I will do more deals. It's funny. We'll do more deals. We will do better deals with less cash, and I look forward to that. And I think you're right. I think this is 2 years. I think it's 2023 and 2024. And then I will close with I think creative financing will be the number one way we do transactions the next 2 years. So learn it, invest in it, figure it out. Anna, where can people find you?
Absolutely. You can find me on social media at Anna Kelly, REI Mom. You can find me on my website, reimom.com, for coaching and mastermind. And if you're an accredited investor looking to invest in apartment deals where we make an impact on our communities, you can find me there at greaterpurposecapital.com.
Awesome, Anna. Thank you so much.
Thank you.